So without further ado, all of our panelists are here, and Bahiyah, if you don't mind kicking us off with just giving a quick intro of who you are and maybe an overview of your work in 2 minutes, even though I know it's years worth of things to talk about. But yeah, we'll
Sure.
start with you.
Absolutely. And you can hear me fine?
You sound great.
Great, great, great. Hi, everyone. Good afternoon, morning for those who are in different coasts. I'm Bahiyah Jasmine Robinson, founder and CEO of VC Include and founding partner of the Include franchise. So VC Include, I'll just kind of stick with that for now, is a platform for diverse and emerging impact investors and VCs. And we'll talk more about how we got into that from the impact investing side. We also are a emerging manager program. So we just launched the first ever emerging manager program, which is basically just a training and education program series for the next generation of first-time fund managers that are, my new word is HUGs, historically underrepresented groups. And so, 80+% Black, Latinx, and Indigenous. And we have a climate fund program that we're about to launch. And so we're, a kind of a triple threat of, platforms that support Fund 2 and Fund 3, so later stage fund managers that are investing in underrepresented companies, and a training ground for the next generation of investors. And then we also have a vehicle or a fund that we're building to make investments across both platforms. So that's a little bit about me.
Perfect, thanks. And I'll pass it over to my colleague, Leslie.
Great, thanks, Jasmine. So I am Leslie Lindo. I am the portfolio manager at Candide Group. So excited to have the pleasure to work with Jasmine. And in October of 2019, Candide launched the Olamina Fund. And so I co-lead that with Lynn Hoy. And we launched the fund to really focus on racial and economic justice, and looking at providing access to capital in communities that have experienced historic extraction and inclusion from the economy. And we primarily lend in the Deep South, Indian country, and rural America to CDFIs, private funds, and projects that build community wealth. I'd say the majority of the folks who we lend to are, or organizations that we lend to, are women and BIPOC led. And we really look at organizations where the leadership is representative of the communities that they serve, so that we have, really that lived experience kind of driving the way the work is happening. So it's been a really fun engagement.
Awesome. And last but not least, Taj, if you could introduce yourself.
Thank you, Jasmine. Welcome, everyone. Thank you for this. I'm Dr. Taj Eldridge. I was previously the Senior Director for Investment at the Los Angeles Clean Tech Incubator, which focused on renewable energy, electrification of transportation, and circular economy. I was the Senior Director for Investment there, managing the investments team and the venture capital funds that are there. As Bahiyah mentioned, she is a part, and she started the Include franchise. So I'm now part of that franchise. I'm a partner with Bahiyah in Include Ventures, which is our fund focusing on HUGs, like she mentioned, historically underrepresented groups. So for me, it's very important. My mother's Dominican, my father's Sudanese. So I come from this intersectionality that I want to see more people who look like me in this space. So yeah, glad to be here.
Thank you all. Actually, to dive a little bit deeper into introductions, I love a good backstory. I know how I got moved into this work was really one, like so many of us, just growing up in a community where systems of finance had such disproportionate effects on different community members. And then as I got older, actually learning what people were doing in terms of subverting capital, getting to the points in their careers where they could actually make decisions that kind of change the shape and contours of community wealth building. And I've really just gotten to where I am being inspired by folks like y'all. So what in your journey brought you to the work you do today? And why impact investing? And Bahiyah, do you mind kicking us off?
I'm really trying to keep these things short. I mean, two separate questions, I think, as quickly as possible. My story, I mean, it's different and then it's not different, meaning, grandmother, got her education early, actually, because of the World War I, was one of the first Black women to get a master's degree at 25 years old. She passed at 92. So, I mean, a very long time ago. And moved the whole family, migrated from Texas on my mom's side. My dad was an orphan, and so there's not a lot of detail there in terms of the migration patterns. But what I will say is that both of my parents were, although they were educated, with masters and PhDs, they didn't really understand like financial literacy, right? And so I wasn't born with a lot of like, you invest, you do this is how you build generational wealth. One, because they hadn't been taught that and didn't know, right? And they weren't able to pass it on to me. And so what they did pass on was also education and a great network, right? And so I definitely had some privilege, coming, we all have different privilege. I had that, but I was really scared of money. I was scared about this investing thing. I did not want to go into finance. I mean, in fact, I wanted to be a diplomat, but I wanted to be a diplomat for the same reason I'm in finance now. I wanted to be a bridge to, underrepresented communities and connecting them to value creators and investing in value creators and creating that kind of supply chain. And so I'd say, what brought me to impact investing is that I realized that you can't decouple, economic growth or positive, even social growth and impact with economics, right? And so about 10 years, 2021? I'd say 2009 is when I started working directly in Africa. And it's so funny that, I mean, I'm African American, but that it took Africa being a little bit outside of the US to say, there's all this opportunity. I knew it was here because I was already working with social entrepreneurs, but this kind of like landscape of innovation with no connection to capital, like none, no connection. And being that first investor, that impact investor, investing in the first generation of tech startups was really what made me kind of get comfortable with capital, get comfortable with numbers, get comfortable with, you see an opportunity, if you have the capital to invest in it, and you do that consistently, even if you have some losses, you're going to, over time, reap the benefits of those investments. And so, and then we can talk about getting to the VCI piece, but that's kind of where my journey led me into impact investing, which I started investing on the continent in 2012.
I think I wanted to be a diplomat too. I studied peace and conflict, and then you can't get away from the fact that behind every social issue we care about and every opportunity for change, there's capital. So
right.
The more bridge building. Leslie, can you share a little bit about your story?
Yeah, absolutely. I really appreciate you starting with kind of the family influence, Bahiyah. I would say that I have a very similar influence in my life. My dad is kind of well ahead of his time, and he started really looking at opportunities for building community wealth through shared ownership in businesses, and launched a model decades ago that I felt like I was growing up with. So it was really kind of centered around these principles of shared ownership, really understanding the difference between being a consumer and an owner in this economy, and entrepreneurship. So I would say that, those are some of just a handful of the many lessons that I learned from my father. And so that really kind of set me on an early path to being an entrepreneur. And when I lived in Phoenix, it was, kind of really the ripe environment for a lot of developers to come in and try to develop these spaces in neighborhoods where there were abandoned buildings and lots, and really look at how they're turning a profit rather than focusing on what was needed in the community and what the community members wanted. So I launched an accelerator program to activate these spaces that were driven by community-based ideas, and ran them through an accelerator to kind of move these ideas from concept to being investment worthy. And that's when I first really learned about how challenging it was, the way that, our financial system and our investment systems are really structured, and how they really don't meet the needs of the community, and that it's just been kind of the same, rinse and repeat, historically. And so we're not really looking at what's really needed to support these types of development projects, as well as business opportunities, and supporting an entrepreneurial ecosystem. So I think that that's really kind of what made me really think about different ways to invest. And after doing that work, spent a long time with Common Future, and really focused on building entrepreneurial ecosystems in in communities around the country, and trying to bring together investors to really understand the needs of these entrepreneurs and how they need to be thinking about investing to support community wealth building, particularly in these communities that have been historically underrepresented. So I would say that's a big part of the journey. And so joining Candide was really the opportunity to be in the driver's seat, if you will, of saying, here's the opportunity to direct capital to those who I know need it most, and to be able to be in a position to think about it more creatively.
Awesome. Thank you. Yeah, Taj, why impact investing for you?
Yeah. Well, maybe I'll start with really quickly, kind of like the background. When I was younger, I grew up in Dallas, Texas. So shout out for anybody from Dallas or from Texas. But I wanted to be a musician, a rapper to be specific. And my parents were both academics, and they were like, you're going to be a doctor or a doctor. And so I said that, I'm going to go study poetry and literature. And needless to say, when I got out, I did not release an album. What I did have was this great knack for storytelling. And I went into banking. I went into Wells Fargo Bank for a decade. I was in consumer and corporate banking. And then I went to UBS in asset management, wealth management here in Beverly Hills. And then I did an MBA in economics and a PhD in economics, and went into high finance in the hedge fund industry and private equity industry. And I started investing in startups myself. Became a founder, had a lot of failures, was blessed to have 2 exits. But all those experiences were not, in my opinion, impact. They were in the mobile space, in the consumer space. But I can tell you that for me, my journey into impact was via clean tech. And when people talk about clean tech, I think that, shout out to Saul Williams. I had to stop because Saul Williams is like one of my favorites. So I'm getting a little chills here. But here's the thing, though. When I was making a transition from being a founder and an investor to in the accelerator space, I got diagnosed with a disease called FSGS, which impacts your kidneys, especially if you're a person of color. What that taught me was that clean tech and climate change is not something to be worried about for our grandchildren and our children's children. It's something to be worried about right now. It is a public health issue. It is an economic justice issue. It's a science issue. And so for me, that's why I became a climate justice warrior, and also really understanding that the investments that we make, every investment that we make has an impact. We just have to figure out if those impacts are positive or negative. So for me, I think it's just how can you make the investments that you're making and make them make sense for the communities that you serve? Because people need to understand that every decision that you make, every investment that we make is going to have an impact.
Awesome. Yeah, that actually brings us perfectly to our next question, because you just touched on what is and what isn't impact. So let's take a step back and start defining what that means for our communities. Yeah, Saul Williams is not here. Sorry. Because, okay, so private capital allocation and the American financial system at large have been exactly the engines that brought us to where we are today in this kind of dystopian wealth inequality state. So naturally, folks are skeptical to even touch finance as a tool for potentially positive, transformative change. So in your work, what's your personal definition of what good impact investing is? And maybe also what it isn't. So whoever wants to start first, whoever feels moved to maybe give some examples, that would be really great to get us grounded.
Jump in. I really think, impact investing is looking at how the dollar or capital or whatever unit of investment moves across both the supply chain and the value chain, right? So to me, being an impact investor pretty early, what would $30,000 or $50,000 do, US dollars do for an African entrepreneur in Uganda or in Kenya, or I mean, for us it's like, okay, 30 grand, but for those communities it's like, at least a year of salaries, right? That's a lot of capital. And so again, I started looking at that unit value and like, so what does that do in 2012 that in 2022 is going to reap certain benefits, right? And so even though we see all these fintech companies and, Africa's rising and blowing up, a lot of the infrastructure and investments created the impact for them to grow. And so I look at that impact piece when we look at our own communities here in the US in terms of how the investment is being made at the manager level, at the portfolio level, and how that's kind of being what the impact is on the ground. And sometimes it's not very clear, like it's like this dollar is doing this and this. But if you look at your impact dollars holistically, you can start to, create an impact thesis that allows you to get to those outcomes over time. So that's, from a macro perspective, how I look at it holistically. I think what it's not is, I mean, that's a deeper question. I think, there's the challenge that I'm trying to disrupt and evolve right now is that, asset managers, only 1.3% of asset managers are women or people of color, 1.3. And so when you see more privileged groups, we already know, we don't have to call them out, but more privileged groups kind of harnessing that power and being the gatekeepers of that power, what does it look like to kind of not go with the white man or, a person of more, white heritage. Even saying that is just kind of weird. But my point is kind of including, these historically underrepresented groups in the decision-making process, not just at the portfolio level or the company level, but at the asset manager level and even more at the asset allocator. The asset allocator is choosing who's then investing in the companies on the ground. And so again, understanding that supply chain and the value chain and disrupting it on all levels is kind of something that I think is really important in the impact space.
Yeah, I would love to just kind of lift up that last point. I mean, I think really a lot of what we're focused on is how we can shift the traditional power dynamics and really have the decisions about how funds are being allocated coming from those who have the lived experience. I think, too often in our space, what doesn't work is that we center the needs of the investors. And, rather than the needs of the community and the folks who, are receiving these investments. And, and from that perspective, we tend to get in the way, and cause more harm, even when we're, in this framework of intending to do good, And so that's one of the things that I think I find, most challenging. And so we try to really lean on the folks who have the lived experience to give us the guidance on what needs to happen. So, not having these preconceived notions of, what, for example, when we're lending to CDFIs, what it looks like to have a delinquency ratio, just to say, oh, if you have above this amount, then, then your whole portfolio is at risk. We have the portfolio at risk, numbers and standards, but it's really looking at, what's happening in that community. What are those entrepreneurs facing? What is that, that market like, and what do they need? And, and particularly when we find that we're the CDFIs where it's being led by folks who are representative of those communities, they actually have the trust and the relationship in those communities to work with those borrowers to kind of work through the challenges that they're facing and support them. And so they don't actually, while there may be a delinquency, they don't usually end up being written off because they can help them work through that. And, and so, I think that that's where we just really kind of need to focus on understanding what the community needs. And one of the things that we built into the Olamina Fund is having a community advisory board. So we have the folks who are representative of the communities where we lend, guiding our strategy, and then also we'll be participating in our credit committee to make the decisions on how those funds are being allocated to whom, you know, and also taking a look at the investors who are interested in investing in Olamina and saying, you know, and kind of getting as much of a profile on these investors as we do on the folks who are potential borrowers, to understand what is their pathway and what is their potential to actually cause harm, even though they're trying to do good.
Yeah, and oh, go ahead, Taj.
I was just going to add, both what Bahiyah and LACI said are definitely on point. And one thing I wanted to add, Jasmine, is that I can tell you what impact investing is not. It is not a pathway to have concessionary returns. I think historically people have always thought about, oh, you know, impact investing, that's charitable, philanthropic, blah, blah, blah. The picture I wanted to paint for you is that before March 2020, right, this economy was roaring, we were humming, blah, blah, blah. And then something happened that changed everything. It impacted everything that we did, every economy, everything else. And the thing we have to think about is that if we're not preparing for those next dilemmas that may happen, then it doesn't matter what type of returns you get somewhere else, right? Because we're seeing the impact of it. So I think for me, impact investing is preparation. It is preparation, right? And it's really kind of preparing both the economy and the people for something different and for the things that are happening there.
That's beautiful. I love looking at impact investing as like one of the vessels for this great transition that we need. And then I think as we're already undergoing, and I was just going to lift up before we could say it every single day and it'll still ring true, is that good intentions are not enough. We need structures that keep those good intentions accountable and in place to all community members that we say we're working for and alongside. So let's get into some concrete examples. What are, maybe let's just start with, what's one investment or project that you're personally involved in today that you want to use this space to highlight and it makes you hopeful for the future? And if applicable, what makes that investment particularly anti-racist, since that is kind of the core theme of this conference and what we're all, I think, excited about here today? Whoever feels moved to start, please jump in.
I can go. I love this question because I feel like I love to see money in action. As an economist, I think things kind of do that. One of the investments that my team and I made recently was a company called Amp Air. They build electric airplanes, and you know, they were just acquired by another company called Surf Air. Two reasons for me that's an impact scenario. Number one, of course, I'm in clean tech, so I'm always looking at greenhouse gas emissions. If you're from Los Angeles or heard about it in Los Angeles, there was an airplane that literally dropped fuel on students in East Los Angeles, right? Because as most people don't realize, most places they come in, they drop fuel. So that concerns me definitely on that end. The other piece about that too is that, you know, for me, impact investing is three areas: environmental impact, economic impact, job creation, and social impact. So when we make investments at LACI, what we did is have those frameworks. We want to make sure that each investment that we make has an environmental impact that they can look towards and document. They have an economic impact, meaning that are they deploying their technology in LMIs, low to moderate income communities, or opportunity zones, or are they hiring from that as well? And then the last piece of that, the social impact, in my opinion, kind of falls on this idea of anti-racism. For me, when I get into investing in a venture, it's about ownership, right? And I think as an economist, we always talk about the pathway historically for ownership has been housing. And we've seen what the credit crisis did to that for a lot of communities, both Black and brown. The next stage of that then is ownership within companies, small businesses, or technology. So that social impact piece of it that we do is we say how many people of color, underrepresented, the HUDs, as he had mentioned, underrepresented people of color are on your C-suite, senior leadership where they can hire and fire and write checks, or are your board. The reason we chose that is because those three individuals will have access to the cap table. So when a financial situation happens like this acquisition, they get rewarded. And then they can take their reward and kind of branch out and then themselves impact their own communities. And so for me, it's structural ways to do it. And I always say that there were intentional actions to get us here. So we have to make intentional actions to get us out of where we're at.
And I can jump in and echo. I mean, that's our thesis and our strategy for our fund of funds. And Taj is my partner there for Include Ventures. I'd say, this question I thought about. I had some companies, but really it's my investment in I want to say in myself, but in myself meaning VC Include, and really believing that there is an opportunity to not just be a business, but to be an amplifying and accelerating platform, and to build economic justice infrastructure that would allow for hundreds of, emerging managers, of VCs, of impact investors to invest in thousands of underrepresented companies. And so to me, it was about, spending the years of sacrifice and taking revenues and actually investing a couple $100,000 over 2.5 years when no one else would give me capital into VCI, right? And into proving to myself, and to them, I knew there was a market opportunity. You couldn't tell me that people of color and women are not like the shit, right? Like, and that they don't know how to invest. And I had been an investor. All I know is, very talented people who happen to be of color. And so I was like, at some point this is going to hit. I just need to scrape by until it does. And frankly, at the very, very, very last end of my rope, things started to turn around. And then when COVID hit, and a lot of, because we'd been in the market for a few years, there was a big groundswell of both support and awakening of understanding of, oh, this is what she's trying to do. This is what she's been talking about. There has to be economic justice infrastructure. And it's not just about one, again, company or investor or allocator. It's about a whole network of CDFIs, of different funds, of companies nationally, if not globally, that are connected to the types of deals and the types of opportunities that historically represented groups have had access to for generations. So to me, that's the biggest investment that I've made.
That's awesome, Bahiyah. And, it's interesting. I was thinking about this question as well. And I think probably the most inspiring for me and giving me hope is partnering with, our kind of sister fund, the Restorative Economies Fund, that was actually established by Nmaka Agbo, who's the CEO of Katali Foundation and has been the managing director for the Restorative Economies Fund. And really, it is kind of like that, just that shifting of how we the economy and really shaping that picture for what an economic system should look like and how it should actually be serving these communities. And just really kind of looking at the evaluation and prioritizing the shared ownership that's happening and lifting that up and building that true level of community wealth. And also looking at just even the structure for the investment, to your point, Taj, it's not concessionary, it's how it should be, and it's really looking at what's the runway that these businesses need to get off the ground so that we're not actually extracting from them right at the beginning and not even getting them a chance, but giving them a chance before they get started. And so, so that's just, just kind of the values embedded in the structure of the investments, as well as what it's encouraging communities do to be in a place of self-determination.
Yeah, I'm being conscious of time, even though I feel like we could talk about this particular question and examples for hours. But before we open up to Q&A, and folks, as a reminder, do use that Q&A function and let us know what you want to hear. But I know, just based on scrolling through people who are in the chat right now, there's a bunch of folks, some who familiar names maybe in the impact investing space, and I think a lot of folks who may be really new to even like these broad concepts. And so from your vantage point, I know this is a tricky one because it's a very broad question, but what's maybe one call to action you would like participants to take with them after this session as it relates to either how they think about investing, how they personally use their funds, a project that you're working on that could use some more community support, whatever is kind of top of mind for you. Let's use this to highlight that.
I can jump in with just, 2 or 3 maybe calls to action. One is, it's really important for us, especially at this time, to be, teaching ourselves financial literacy for those who don't already have those skills, right? I'd say the second thing is to, invest in yourself, but also invest in others. And that might mean, not just monetary. If you have capital, become an angel investor. If you don't, be entrepreneur, connect them to other investors that might be in your network. Everybody's coming to this with a different perspective, and obviously with a different wallet. And so, but that doesn't mean that just because you might not have capital today, that you can't, invest in another company. And I think the third thing, and it's Taj's point, this is again why we're building the Include franchise, is ownership. There has to be ownership all the way up the supply chain, so that you're not just talking about Robert Smith, right, being a billionaire. I mean, there needs to be more capital flowing, and that requires not just investment on the ground, but investment through the whole value chain of the investment industry.
Yeah, absolutely. I definitely want to echo what Bahiyah said. One thing I would say, though, as a former founder and an angel investor, what have you, one of the things I think a lot in our communities fell on is that there's a phrase in Africa that says many hands make light work. What that means is that collectively we're stronger together. A lot of times I'll see people who try to go down this pathway, either being an entrepreneur, investing, what have you, and they're doing it alone, and they're not really thinking about the power of we. And it's like we have to think less about me and more about we. It's the same reason that BIPOC and are connected together with Include Ventures. I mean, as another specific example on that, there was an announcement recently about a company called Bevy, Bevy, where over 20% of the investors were Black, including myself. And it was a $40 million round Series C. The reason why that's important is, again, we're not having access to these deals at this level to be able to turn that money and to reinvest in our own communities. But together and collectively, we can, right? And it's the same reason that you see, like, for example, our Madam Vice President is a member of Alpha Kappa Alpha. You'll see that the Secretary of Fudge, who just talked about housing as an infrastructure issue, is a member of Delta Sigma Theta. You'll see as me as a member of Kappa Alpha Psi. There's a reason that it's about collectivism and togetherness. And so I think that's the only thing I would love to say for our groups, is to understand how to come together and really make these things happen and make change from a collective standpoint.
Oh goodness, Taj, I love that. You're bringing me straight back to kind of my father and his words throughout my life. So I'd really like to end on that. If you want us to each contribute here, Jasmine. I mean, I think the only thing, just really quickly, that I would add, because I love what both Bahiyah and Taj have lifted up, is really kind of redefine and reevaluate how we think about risk, and understand that really those who have the most to lose are the ones who are most at risk, and it's not those who already have the privilege and the wealth who have who are going to be bearing the risk. And so to just kind of shift that language and that narrative and that lens through which you're making investments.
Absolutely. Leslie knows I'm always like geeking out about risk and return, and really just thinking deeply through what is the risk of not funding some of these incredible ventures and community wealth building opportunities. What is the risk not only to those communities, but to our entire ecosystem? Like, we are headed for disaster, not to be that person, but we are, right? And also the question of return. If you are an investor who may have made your wealth, your generational wealth, from exploitative industries that have actually uprooted the lives of community members, and now you want to invest, for example, with an anti-racist lens, do market rate returns necessarily make sense for you? What is a market rate return? How did we get here? Thinking kind of a little bit bigger about these systems. And that actually brings me to the Q&A, because I saw that Regina Davis asked the question. I love this question. What are the sources of your funds? And I think she means that, correct me if I'm wrong, Regina, but just in terms of, as folks who have the ability to direct capital, where is some of that capital originating from? Maybe immediately, and maybe, I guess it'll depend on who's answering the question a little bit, but if folks want to speak a little bit to some insight there, because I think it is sometimes an elephant in the room of these questions when it comes to investing.
And just for clarity, are we talking about the source of capital? Because we aggregate fund managers. So when you say funds, I think of asset managers.
No.
I mean, I can.
I think in this one it was a turn talking about capital, but that's why I think for y'all it's actually a two-sided.
Yeah.
But maybe starting with capital.
Well,
yeah. I mean, go ahead, Taj. You have a good story on this.
Yeah, we know each other too well. I think two ways, right? So if I look at it from a standpoint of me being a founder and where the capital came from, I think sometimes we don't look in the, I'll use these words, we don't look in the unsexy places, right? If you're in Oakland, if you're in East Palo Alto, go to McDonald's. That's my family McDonald's. Go support them. But that's where a lot of the capital initially came from some of the investment for some folks that I know. There's from business owners, small business owners that spent years kind of doing some franchise work. A lot of times we think venture is the only way, and it's not. And even though I'm in venture capital, what I always say is that venture is like rocket fuel. But if you're building a bus, why are you putting rocket fuel in your bus? Right? There are other sources of capital out there and other ways to have it. So I just kind of look on the small business community and some of those individuals who've been in that space before. There of course are, pension funds and other traditional banks, things that are common to investing. But again, if you remember and you recall, I mentioned how I was in was music background, and I'm loving to see how you're having more people in music, like Master P and others coming into the investment space. I mean, Nas, the rapper Nas, has a fund called Queensbridge that's been doing amazing things on the growth stage, right? So I think at the end of the day, capital is there, and we just have to figure out, have the right conversation, the right story. I think what unlocks capital is not, I'm having a great pitch or what have you. It's a relationship. When I make an investment, I'm not looking at just the product market fit and all those things. They are important, but also what I'm looking at is you as a person. Are you the right person to run this endeavor? Are you the right person to manage my money? Because at the end of the day, I have to be a good steward of the capital that I've been given and that I do have. And you know what the good book says about being good stewards, right? So I think that's one of the reasons that you have to look outside of the traditional places when you're talking about getting capital as well.
Jump in and say, I think distilling it down to where do you get funds from, right? It's earned revenue, right? If you happen to be folks that have excess, usually entertainers, doctors, lawyers, folks that make a lot of money in a year and have discretionary, and then over years they have capital to invest, right? And market, you can get funding, right, or funds or capital from public sources and private sources. And public sources are the things like for fund managers, for pensions and other large, public and sometimes private sources of capital that invest, right? They have portfolios, they make investments. And the other one is through entrepreneurship, right? Like that's the other way. And I think, our ability as a community to drive entrepreneurship in the ways that, Leslie has spoken to, that Candide, invest in, debt products and loans and other ways, even for small businesses that, to Taj's point, might not need the rocket fuel, right, of venture. They might not be a scalable tech business. They might just need some technology upgrades, right? and to build a generational, legacy company that they're happy to have in a particular region or city, and kind of build from there. And so, sources of funds take on different dimensions depending on how much you're trying to raise, what type of structure you have. And I think someone asked about the service-based model, like structure depends on the structure that you're looking to, have invested in, right? Or that you're looking for capital for. And so matching your needs for capital with the type of sources, public, private, if you are putting your own money in because you've made some money off real estate, or, whatever that is, it's important to kind of think through all those things so you're not going to the wrong places for money. Because I think that's one thing with our community not understanding kind of where to go for capital. You spend a lot of time like chasing your own tail, because you're like, I'm a small fund and I've been talking to pension funds. They're not going to invest a small check. Like, that's not. And so the same way for a company that might say, well, we've been going to these athletes. Well, they want to do sports and entertainment and gaming, or they might want to do a specific type of tech, but they might not be interested in your type of model. And so I think that's where the financial literacy and kind of understanding your market and understanding these sources of funds becomes really important.
Yeah, and for us, obviously, we're a loan fund, so it's it's a little bit different than speaking to where entrepreneurs can access capital. As our new loan fund, we really are still in the rounding the corner of towards the end of our pilot phase. We launched with with investments from a couple of DAF funds, donor advised funds, and and it's been an interesting for us as we're looking at opening up the fund for new investment. Where is that money coming from, and who? Because really, we're looking at our investors as partners, and again, where are they going to be looking through a lens and an approach that will not cause harm in the community where we're investing, that they're not going to be putting in burdensome restrictions on the types of structures for these loans. And so for us, what we look to, private family offices, foundations, high net worth individuals. One of the things that we're developing is an investor impact questionnaire. Again, kind of looking at leveling the playing field with, the borrowers, on the borrower where we have impact questionnaires for them. We want to have the same kind of evaluation of the investors in the fund. And, so we have, a lot of questions to understand that investor story and their commitment to investing in racial and economic justice, and what that means to them, how they're defining that, how they're kind of reckoning where their wealth came from, and really how, they're flipping in their minds their sense of risk and return, and what that looks like if you're going to be an investor in the Olamina Fund. So it's really, where we're getting, our funding from, our sources of funding, it's really, through folks who we feel that we can be in a deep relationship and partnership with, who will be values aligned and not thinking.
Yeah, definitely. That, I think the relationship dynamic that Taj mentioned before, and I think you all touched on, the ability to have a capital provider who you see as a partner, as opposed to someone who, I guess the antithesis of that would be like a loan shark, right? Someone who you see as not on your team at all, but someone who actually wants to profit off you. Not every kind of capital is meant for every kind of project. So really thinking deeply around what is the type of capital that I can take on, maybe as an entrepreneur, and is it going to be something that ultimately is happening out of relationship and partnership, as opposed to pure extraction and transaction? Because again, we're not going to be able to change systems and power dynamics without shifting from that kind of transaction model to that relational model. We have just a few minutes left. One more question that was in the chat, if anyone is able to speak to this question from Yvette, is what's up with the tendency for investors to shy away from the service-based model over product-based model, and the why and the past of recent service-based enterprises. So if anyone's particularly familiar with those two differences and maybe what they're seeing in the space, please
Yeah.
on it. Yeah.
So I'll speak real quickly. I actually was an investor in a service-based model. It was a digital agency. And for the longest, we tried to get venture capital, and we didn't. The reality of it is what, again, using the marriage and relationship analogy, we were barking up the wrong tree, and we were going to the wrong parties to find the wrong people. That company ended up being acquired, and that was one of the investments that I made that was quite lucrative in that space. But what that taught me in that experience is that it's not that investors are not interested in that type of business. Is that you're talking to the wrong investors. You're looking at the different things. So there are some investors that like easy. I'll be honest, they don't want to work, so they try to get the easiest, the easiest type of investment. I graduated from Stanford, I dropped out from Harvard, blah blah blah. My skin doesn't have any melanin. I don't. That's a different way. If you're a founder of color, if you have a service-based business, there are some people out there. You just have to find out who people are interested in it. We were a mobile digital agency, so we didn't go after the people we went after were also in mobile. That's how we were able to get acquired and able to get additional investors. So we went after our community and the community that was around us. I think a lot of times as founders, we just think, oh, the community I need to go connect with is investors. Might not be. We like Bahiyah and I, we invest in venture funds. So there's no need for us to really right now to talk to founders. But if a founder comes and says, hey, kind of talk, you can use that time going somewhere else. So I just think at the end of the day, whatever your product is, whether it's a service business, a product business, consumer, B2C, B2G, whatever, find the tribe that you're in and pitch to that tribe.
Exactly. And that takes time, right? I'm seeing a comment in the chat from Kim who says, when we were launching our tech product 5 years ago, we literally had a VC tell us our product was boring and no VCs would be interested. Yet they're still here, right? Every capital provider is going to have a different view. And just because they are maybe deemed by some as the experts in their fields, people are funding so many different things. And what's right for one might not be right for another. Does anyone else want to add on to that question? I think there might be one more in the chat. Cool. From Chris Mings, he says, so as an individual, I can invest in an impact investment fund, which will direct the funds to meet the needs of some underrepresented communities that banks would not typically lend to and get some return from my investment, ? So if anyone wants to speak maybe generally to kind of that system and what we're talking about.
Generally, yes, right? But I guess the caveat is doing your homework on, and you're investing in a viable fund. And I only say that, and also will say that there are so many viable funds to invest in. So that's what's predicated on my yes. I mean, I think, if you're an accredited investor and you have enough capital to, take the risk, because it's risky. And I'm, by the way, not a registered investment advisor or anything. So I have to give that, that disclaimer. But in theory, yeah, I mean, that would be a highly catalytic, a highly catalytic investment.
And, us as investors, like I said, are right now primarily investing in CDFIs and private loan funds, community-based loan funds. And, and there is some return on that, but I think the expectation needs to, not honestly really exceed 2 to 3%. We're, the notes in our fund have been, at 1 and 1.5%, depending on the duration, and the folks who we're talking to, particularly, for example, in Native American communities, native CDFIs, we would highly recommend looking at investing and have limited access to capital. Most of the folks, when they're starting to kind of look into the CDFI space, it's being lifted up. When you saw like Twitter, for example, make a huge investment, and partner in a fund with Opportunity Finance Network, there's not a lot of attention that it's specifically going to native CDFIs, and they don't typically have the access to private investors. But when you're investing in them, again, really think about what you mean by return, and what, and, kind of right size that expectation, understanding the lived experience in these communities, and when they're trying to lend to their borrowers, the rates that, they have to put out at. And so they're already making the slightest of margins, as it is. So, the closer you can be to like that 2%, the best.
Awesome. I'm not seeing any more questions in the chat. I think you guys answered every question there possibly is in the world. But is there any like parting thoughts that you want to leave this group with? I know I just want to say thank you to you three for being here and sharing your expertise, as well as to the folks at Mills College for curating such a well thought out and really beautiful event.
I just like to say it's an honor to be the minority and not be on panels, where you have a panel of men. So shout out to you ladies and allowing me to grace this presence with you. I appreciate
that. Team is everything. I have to say, shout out to all of us and everyone that has put the panel together, the conference together. Really appreciate, zeroing in on the anti-racist future. I think we represent that collectively. Taj in particular, I just love that, he's thoughtful enough to always lift up, voices of women, and just feel really honored to have such a wonderful cohort of, men in the Include franchise, from advisors to partners, et cetera, that are always saying, it's the first time in my life I've been kind of shocked to hear someone say, Bahiyah is the leader, but Bahiyah is the leader, Bahiyah is the leader. And it's like, wait a minute. I mean, I am, but just to be acknowledged, like all the time is it's such a beautiful thing. Share that. I know it's a personal, but it's also, I think it's where, we need to be more gender balanced, and that's what it means. It doesn't mean, necessarily, I mean, we all have power, right? Taj's power is lifting us up. That's power. It's not giving it away, right? So I know we're talking about anti-racist, but also I think it's important to make sure that, we include women, and this is Mills. So, right, we want to make sure we highlight that.
Yeah, amen to that. We're really proud that most of our investments have gone to women-led organizations. So that's been really exciting for us to see, in the field. And so, I'm grateful for, organizations LACI include, who are really making sure that we're bringing forward more diverse investment managers into this space. I think that's absolutely what we kind of getting back to, again, to that lived experience and the representation. So, if it's not, that, and that's kind of one of the things that I would say is that, if you don't share that lived experience of the communities that you want to support, then look to invest in or partner with, managers who actually do share that. They're the ones who are closest to the ground and understand and can make the best calls on the right investments for you. And what that structure would look like. So that's something that really, why I really appreciate the work that you all are doing. It has been such a joy to be on this panel with you all and be in this conversation. And I'm really grateful for this opportunity and for Mills and the team to put on this event.
And Jasmine, let me. This is that no matter if you're watching this, you're in the chat, everything you do has an impact. I want people to recognize that every decision that you make, from what you buy to what you don't buy, to what you say, to what you tweet, what you talk on Clubhouse, has an impact. So we have to be cognizant of that. And what we're saying is, I don't want people to walk around and just say, I'm woke, but I want people to walk around and be educated. You can make decisions, and I think what we have to think about is us as people of color, as Black folks, as Latinos, I'm Afro-Latino, we're not a monolith. We're not going to all think collectively all the same. But there is a song that says there's a right and the wrong way, and we know what that pathway is. I think we have to always think about what are we doing, how are we doing it, and what are the impacts. Every decision, every time I speak, I try to think about what are the reverberations from that. right? Because everything that we do is going to have come back to us. There's an old phrase that says there's death in our tongues, but there can be life in our tongues as well.
Very. Regina put in the chat, when you light a lantern for others, you illuminate your own path. Thank you all again for lighting all the lanterns. And here's to deeper, more intentional relationships. Here's to less manels. And here's to the rest of this conference and our anti-racist future. Thank you.